Let's get started. So, hey everyone, welcome everyone to this, private equity and venture capital MBA recruiting forum. I'm really excited to have. I know it's a Friday, it's sort of holiday time, and so we'll do a better job of scheduling and finding kind of different times for this. But really excited to see. I know we had over 300 people sign up, so people are going to trickle in, and so on. And obviously, we're going to have more of these sessions, so more to come here. Thrilled to welcome, like I said, all of our MBAs across all kind of our top 12 business schools, as well as an incredible panel of speakers who will deep dive into sort of all aspects right around private equity recruiting. For those that I haven't met yet, Kaushik Ravi here. I know I've met a lot of the MBAs this fall on campus. Founder and CEO here. My background is 9+ years, as a leader across private equity investment banking to date. Started at Goldman Sachs and Investment Bank. Then private equity vice president at Goldman Sachs and director in PE, leading over $200 billion of buy-side and sell-side deals to date. Today, like I said, we're going to go through a pretty comprehensive view of private equity. I'd love to first start off with, we have Claudia, Martin, Iona, and Tina joining as well. Claudia and Martin will really cover the private equity side of the world. So late stage, majority ownership, private equity, growth equity to an extent. And then Iona and Tina, hey guys, will cover our, venture capital and earlier stage growth side of the world. So maybe you could start with just quick intros. I think, give quick intros, I guess, Claudia, actually you guys can do it. Maybe just focus on, what is your private equity sort of experience and maybe like, what was the transition point into that? Like what was the, less on the academic school side, maybe more on the professional side, how you broke in and what was your background prior to that? So, Claudia, why don't we start with you?
Yeah, sure. So everyone, hey, I'm Claudia Casala. I'm currently a second year MBA at London Business School. And I'm originally from Finland and then moved over to the States when I was about 10. Ended up at Washington and Lee for undergrad and then professional background. So I didn't totally come from a cookie cutter background. So I actually started working in kind of sales and business development for a digital design firm when I was in high school and kind of did that all the way through college. And while I was kind of studying, finance, accounting, all that kind of quantitative stuff, I thought to myself, is there anything I could do at this firm that would be more maybe financially oriented? Turned out they were looking at some add-on acquisitions at the time. So that gave me, I guess, an opportunity to get into the world of M&A a little bit, and hence decided to transition into investment banking post W&L. So was at Black Arch Partners for 2 years, and then hopped on over to Pamlico Capital, which is a mid-market PE fund in Charlotte. Spent most of my time there on kind of tech, software, and healthcare investments. And lastly, I guess I spent my summer with PSG Equity in their Boston office.
Cool. Thank you, Claudia. And I think a lot of the MBAs in the audience will know the panelists are amazing, but we also try to select people who don't come from like a very cookie cutter background, kind of like PE before, VC before, because a lot of the, a lot of our MBAs, we realize, we look at the statistics, right? 70% of you guys aren't coming from the cookie cutter backgrounds, right? So this is the goal is to help people across the whole landscape. So thank you, Claudia, for that. Martin, can we go to you and sort of your background prior to PE and then sort of your background in PE?
Yeah, sure. Hi, everyone. I'm Martin. Thanks for having me on, Kaushik. So I'm originally from Sweden. Grew up there, did my undergrad there in economics and finance. And during my time in undergrad, I also tried to do some internships. I had this idea already back then that I might be interested in going to PE at some point. So I did consulting, I did banking, eventually ended up doing consulting full time with BCG. So I was based out of their Stockholm office. Worked there for 3 years, did a bit of everything, but most of the time was in their high practice, which is the principal investors in private equity practice. So I got some good exposure there to private equity, but more kind of on the advisory side. And then decided that I wanted to go for an MBA. Came to the US. I'm now a second year MBA student at HBS. And at HBS, I've been focusing on kind of pivoting to private equity. So I spent the summer at a pan-European middle market private equity investor called Sterling Square Capital Partners, and we'll be going back to a large cap, more or less global private equity fund headquartered in Stockholm after the MBA.
Okay, great. Thank you, Martin. We'll get into sort of the transition, right, from consulting into private equity, which is, quite challenging, but it's very, very doable, certainly doable at this level. So Martin, we'll get back to you on that. I guess now let's pivot to venture capital on more on the early side. Feel free to sort of introduce and kind of what brought you to venture capital and how do you sort of broke in.
Sounds great. Thank you everyone for being here. My name's Ioana. I'm a second-year MBA at Yale. I will jump on the immigrant bandwagon. I was actually also born in Romania originally, came to the US when I was 11 in December of 2007, so great timing. I went to high school in New York City, went to Dartmouth for college, majored in econ, started out my career in private equity consulting. So I was doing primarily buy-side commercial due diligence, some portfolio strategy work, but as a kind of outside third party. And then pivoted into an internal M&A role at Morgan Stanley. So I was part of a small team that was essentially building a whole new business unit within the firm, acquiring institutional RAs to kind of deepen our institutional client base and find some synergies for retail wealth management. So loved the team there, and also realized at the same time I wanted to be part of a much, much smaller organization and team. So kind of pivoted to wanted to switch to the MBA to pivot sort of both on the organizational front, but also on the thematic front. I'd always been passionate about sustainability. I hadn't really had a chance to make that part of my career journey, and wanted to use the MBA to sort of make that double pivot. So came here. I spent 8 months last year interning for Closed Loop Partners on their early stage ventures team. So they do pre-seed and seed stage deals, $500K to $1 million first check, and they're focused primarily on circular economy solutions. So I spent this spring semester interning part-time, converted that into a full-time offer for the summer, and would have loved to stay on for the fall, but I have far too many commitments as it is. So looking forward to staying connected to that ecosystem, and definitely want to stay within the climate investment space. I think probably pivoting into a bit of a later stage Series A, B, maybe growth equity side, just given my prior background and some of the things that I sort of learned about the experience this summer.
Amazing. Thank you so much. And last but not least, Tina, I think, why don't you give us your background and sort of your vantage or entry into sort of the venture side?
Hi everyone, I'm Tina. I'm originally from the UK and unlike the others, moved specifically for business school to New York City. I go to NYU Stern. My professional background was about 8 years in management consulting, focusing on large scale optimization of design implementation of programs at global financial institutions around financial crime advisory. So quite different to the investment space. I briefly moved into product management at a financial institution as well. What drew me to change careers, I was working on some projects with startups like focused around reg tech. And I just like the dynamic nature of it. Totally different to consulting. I felt those big projects in global institutions often take a lot of time to design, implement, can be years. So moving the needle there is a lot slower. So I enjoyed working with those startups and how dynamic that was and different. And you don't have all of the barriers that you have in those global institutions. So I actually moved to business school, not with the mindset that I will go into venture capital, but just knowing that I wanted to work more either in the startup landscape, be it investment side or working in that. And then throughout the kind of first semester of business school, solidified my want to move into the early stage venture capital space. Then while here and exploring that, naturally, I think it would be sensible to go into something in reg tech, given my background, but it wasn't a passion of mine. So I decided to pivot into a different area and focus on consumer investing. And whilst at business school in the first year, I'm a second year student now, I did an internship in an ed tech startup to get that early stage experience because I'd only ever worked in large corporates. And then I did a partnership with a VC consumer fund for an investment thesis, working with them, and then moved on an intersemester internship to New York Angels, which is an angel investing syndicate, working on their like primary due diligence. And that was kind of across the spectrum, more generalist rather than focused on consumer. And moved to the summer to a consumer tech startup, kind of get that other side of experience as well. So that's how I transitioned, but a bit of a different background.
Yeah, totally. Look, I think the MBA point, right, is the area where we have so many different backgrounds. So I'm really happy that we're covering all these different bases here today. So let's start. Well, we have so many questions to cover, right? And in this session, I'll first start with what was the buy side experience like? So can you guys just go through and just help our audience understand what is the day-to-day in private equity, and then what is the day-to-day in venture capital, and sort of what are the keys to success on the role? Because I think I want to work backwards a little bit from what are the keys to success to how do you position yourself for that sort of role, right? So maybe I'll go kind of a different order here. Martin, do you want to start us off with what was your summer like, or your experience in private equity? What was the day-to-day? What was required of you? What did you need to know, especially coming from a consulting background, and how did you leverage that to be successful in that role?
Yeah, sure. I think so. For me, I was in Europe, as I'm sure you know. Europeans take their summer vacations quite seriously, so it was a bit slower. So no live deals for me this summer, but still quite a bit of work nonetheless. I think if I were to generalize, I think there are kind of a few different buckets of things you do, especially on the junior side. I think the first one is just helping out in sourcing and let's say early diligence. So depending on what kind of fund you're at, what kind of size your fund is, you might get teasers from advisors like investment banks or consulting firms. You might have kind of some of the senior professionals at your firm might have some ideas and ask you to do some outside in research. You might kind of engage with expert networks, doing calls, or just kind of working on theses that your fund wants to look into. So I think that's one thing. I think another big thing is more active kind of diligence or transactions essentially. So if you're running a live deal, there's a bunch of things you're looking at, and once again, depending on the size of your fund, your role will probably look a bit different. But in general, you might be doing things like managing various advisors. So you could have the commercial due diligence advisors with the consulting firms. You might have accountants doing your financial due diligence and quality of earnings. You might be kind of doing the model yourself, so kind of integrating everything into an LBO model, and you might be preparing presentation materials for investment committee meetings where you will discuss the opportunity. And then I think the third thing that I would add is also portfolio work. So all funds do it differently. Some funds have dedicated teams that will spend more time helping the portfolio companies with various initiatives. Some funds, maybe especially the smaller ones, might have the investment professionals do that. And so that could be anything from helping with add-on acquisitions, could be more operational kind of projects that you might need to support on, or talent, so hiring new management or designing the management incentive programs, etc. So I think those are some of the big things.
Okay. Thank you, Martin. So basically on transaction execution, around sort of the modeling and sort of the support of the actual memo creation, and then on the portfolio management support, especially on a time where maybe slightly less busy and so on. Makes sense. Claudia, I think obviously you were in the US here in Boston. What was the summer like, sort of at that VP level, VP senior associate level? What is the expectation? And sort of maybe talk to us a little bit about the day-to-day.
Yeah. So definitely from like my experience at Pamlico, agree on those kind of like three legs of the stool for the associate level. I think at the VP level, you start to maybe zoom out slightly from like some of the deeper technical stuff. So even though obviously you're still kind of responsible for what the model tells you, does it make sense? Like you're not sort of building it yourself. The associate is usually doing that. And then you're more reviewing it for like sanity check, like how does it kind of, I guess play in with kind of the bigger picture thesis that you're building, because really as a VP, you might be sort of taking the pen on actually structuring what is the thesis, what are the merits, what are the risks of the deal, like which analyses do I sort of think are the most relevant, and then sort of working together in tandem with the associate to kind of lay all that out for the more senior team for IC purposes. And I think the other maybe key difference more on like the soft skills side is that you're then also managing sort of expectations up and down the chain. So obviously you have to be sort of aware of, what's your workload, what is your associate's workload, and then what are sort of the expectations of like principal partner on timeline. and sort of acting in more of a quarterback role on just managing the deal process and so forth, if that makes sense.
Yeah, totally makes sense. And so for kind of the folks, especially a lot of our first year MBAs, right? So in the PE side, if you're coming in from a PE background, you're usually going to get slotted in sort of that senior associate VP role. If you're coming in from a non-PE background, typically it's that senior associate or, some sort of a senior type associate or associate role. And all just depends on the firm. I think the key is sort of breaking in, right? So that's sort of the first key. Let's switch over to the VC side, I guess. If you guys, the other panelists want to share a little bit about, maybe, and I can start with you, like what was the venture capital role? Obviously a lot of similarities in terms of sourcing and in terms of diligencing, but obviously not as much, quote, financial modeling, I suppose, and things like that. So what were you focused on, and what is the expectation as a day getting into VC, what the day-to-day is like?
Yeah, absolutely. So I think it's probably a similar mix. I'd say it's a third of screening companies, diligence and sourcing. So on the screening front, I think especially for some of the more established funds that have been around for a little while longer, they've already put in a lot of the effort to establish really strong networks, to kind of have a lot of inbound deal flow. And I think as an associate, you're often the first pair of eyes on some of those deals to form a preliminary opinion as to whether it fits the investment thesis, the check size that we would typically allocate, and some of those basic requirements. Beyond that, you'll take intro calls with the founders. You obviously probably wouldn't be alone on most of those calls, but you'd be the one taking notes, organizing things kind of from a management standpoint, just making sure that everyone's calendars are aligned and all those things. And then beyond that, you kind of go through a triage portion of checking conflicts with the investment committee. Once you're in a full due diligence process, that's where you actually do end up doing a lot of the technical diligence. You might have venture partners that specialize in a specific sector, and so you'll bring them in on the specific questions you want to ask based on what you're seeing in the data room. You might have to source some outside experts to really vet a certain part of the technology or whatever product or service the startup is building. And you, at least in my experience, I think you do end up doing some modeling. It's not going to be to the same extent or in the same format as you would in private equity, but in the sense that it's less about kind of coming up with a specific valuation number, even though you're doing some of that. It's more about trying to see if the pathway to growth for that startup is feasible. Can you plan out kind of a 5-year revenue journey? Can you sort of plug in different variables to figure out what the business model might look like, and almost just kind of toggle things on and off to answer some of those internal questions? So you do some modeling. It's just, it serves a different purpose. And then finally, I think there's this sourcing part, which is a lot of it is just self-driven, especially if you're in a big city or you're in a kind of VC heavy environment. There are tons of events going on. There are a lot of opportunities to get involved, and so part of that is you building your own network, leveraging some of your personal network prior to that role to try to source some deals and bring some early stage companies to the fund that you're working with, and that's always appreciated.
Great. Thank you. I agree with that. I think the venture capital side, right, there's so much more relationship driven and so much more sort of sourcing driven. Whereas in the private equity side, we're going to see a lot more structured sourcing, like coming from the partners and the bankers and so on. So super. Tina, I don't know if you want to answer anything. I mean, we don't have to get repetitive, but anything you want to add to what's been said already? If not, we could kind of jump to the next slide. So feel free.
Yeah, I just have 1 or 2 things to add from being in a more generalist, like although consumer driven, when there's not like some of the funds obviously have a very narrow investment thesis, and then you don't need to look into those as much, but those are a bit wider. I found like some more time being allocated to that on the research side of coming up with what that area within the overall arching could be. So it could be looking into that and then bringing in some of the sources that were already mentioned. And then on the different constructs of funds, some of them have accelerator programs with them or marketing arms, etc. So that kind of interaction in the day-to-day could be a little bit different of where you're sourcing from and how you're interacting and handing those off. So I think that lends itself as well to the portfolio management thereafter of how that is. But yeah, echoing the similar type of activities.
Great. And so, I mean, the reason why we started with this topic is because as you guys hear about the day-to-days, right? Like, I want everyone in the audience to position themselves like in the interview process and before, demonstrating that, hey, yes, I don't come from venture, or yes, I don't come from, a traditional private equity, but I can do the job, right? I've led processes as a consultant before, right? Or I've led sort of, investments into stuff, or I've thought about this industry a certain way. I think it's just really important, because I think the misconception in the industry is that you have to come from a certain background. And having recruited tens of thousands of you guys across every level from analyst to CEO or partner, it's more for us to give us comfort that you can do the job, less that you're coming from a given background. Obviously, there's going to be structural limitations. Now let's work a little bit backwards, guys. By the way, great job with that sort of question. Let's go to the interviews, right? So that's the stage right before getting sort of these offers. Would love to hear about the various experiences, not just at the funds you ended up going to, but the funds that you talk to otherwise, because I think I'd love to give the audience a really deep understanding of what are all the different types of interviews and processes that they are, how they should prep for it, and so on. So in this case, I'll start with the venture capital folks first. So if you guys want to give us an understanding of, what was the interview process like? What were the different stages, rounds? What was expected of you? Technical, non-technical, industry thesis, not kind of the whole gamut. So all of our MBAs can be really well prepared on what to expect. Is that cool? Can we go there? Awesome. So Tina, why don't you start, and then I'll work backwards here.
Yeah, I mean, this is a bit of a loaded question, because I feel like it could be quite different at each scenario. And I've seen many different interview processes. I wouldn't say it's as structured, obviously, as we all know, as other industries. So my experience was a lot of jobs are posted, and you could look at that. And typically I found when jobs are posted, particularly in a more formal setting, whether it's through your universities or a job listing, the structure is a lot more set of various rounds of the different interviews. But on the converse side, as has been mentioned several times, a lot of it's about networking, and it could just be a more informal process that is followed. So looking at the more formal processes that I went through as far as recruiting, I typically saw a few rounds of interviews, potentially a first conversation that's maybe with a more junior person within a fund, more of a sense check of, is it a good fit, and some preliminary questions about yourself, why you want to move into the space, and about the target area of that fund. And then moving beyond that, looking at a second round interview, I saw that becomes more of a case-based scenario. So whether it's take home or in person with various other people at that second round interview, being given a case study, so potentially a company and different information on that, and then assessing that and pitching back to a kind of fake investment committee of why you would or would not invest in that. But having said that, those that are less structured, I've seen in different scenarios, and it could just be in a coffee shop and a conversation, or if you're leading that with outreach yourself, talking to various people in the fund, and kind of taking that premise, like the initiative on yourself to send them things. So not necessarily them asking, but the materials that you've prepared before, whether you have investment thesis that matches their target area of the fund, or you have other materials like writing materials that you should share with them, whether you have a startup tracker, you have a few startups that you've been tracking that you think would be a good investment for them, sending those investment memos. So it's kind of like, that's not necessarily an interview, but you can preempt that and share those things that can set you apart from other people, almost carving your own interview process, I would say, in that sense.
Yeah, really good point. I'll come back to this. Tina, if you can think of, again, not specific, but I'll come back to this with all the panels, but examples of case studies, right? Again, it doesn't have to be something specific, but like, hey, we were asked to market size this, or we asked to kind of do this, that we'll come back to that, but really good answer there. Exactly right, where you have formal processes, which are going to be, first round interviews, behaviorals, then you have sort of second rounds, meet with more people in the firm. Third is usually, some sort of technical, walk me through your process, case study, and then so on. So, so great job there. Anna, do you want to kind of talk about your processes and how they went?
Absolutely. I think it was equally a mix of less formal and more formal processes, and I think Tina described it perfectly. I think for the more formal ones, some examples of the technical case studies that I've seen are typically they'll either give you a company and ask you to assess it as an investment opportunity, and then you might have a pitch deck, you might have some additional information. You'll then go in and try to research as much as you can about that specific market and technology, write as compelling of a memo as you can. You might have 2 or 3 days to do that. And then you'll have to present it to someone potentially more senior. you'd also be asked to source a startup of your own. And this is where it's incredibly important to leverage your network and leverage every bit of resource that you can find within the MBA program, and get in touch with the entrepreneurial ecosystem at your schools and within your communities. Because if you have to source a startup from PitchBook with very limited information, you're not going to make a very compelling case. It's so much more helpful to come in with recommendation on a company that you've either met with the founders, or you know more deeply, or you have more information because it's something that's been passed on to you maybe by another investor. I've also been given an evaluation exercise, which is a little bit odd for earlier stage VC, but it can happen. And then there's just a lot of there's kind of multiple ways that you can do that. You can do a comps analysis or whatever makes sense in that scenario, but it can happen. So it's about being kind of creative and using whatever resources you have out there, knowing that you're often dealing with companies with very little, if not no revenue history.
Great job, both Tina and on this. My best advice, they've covered everything, but my best advice is look at how that fund invests, right? So if their associates are out making a lot of kind of cold calls, or doing what just mentioned, which is going through and doing like a screening exercise, yeah, I would demonstrate a robustness in that sort of screening process. If it's more thematic investing, then yes, having investment theses around a certain space and being ready with that, in that space. But generally, you will all sort of see either having to re-underwrite a new opportunity or an existing opportunity they've already invested in. So you can look at their portfolios and sort of see that. But that's going to definitely happen. As far as technical analysis, you guys are exactly right. Valuation comps, maybe initial sort of VC modeling exercises, customer cohort analysis. These are things that we see very commonly sort of on the VC growth side, right? So now switching over to sort of more late stage private equity. Martin, do you want to talk us through a little bit about your interview process and sort of how that just not just for Sterling, but for like all different funds you spoke to?
Yeah, sure. And I think similar to these kind of the whole VC discussion, there's no single model for how these processes tend to look like. And I think it also depends on if you're talking about internship or full-time recruiting. So for internship, I at least found that most of the processes were run by the firms, the PE firms themselves, whereas for full-time, a lot of it actually goes through headhunters, which I think is good to know. And I'm sure we'll get into that later. I think for the actual interview process, I think once again, it's all firms do it differently, but I think there are a few things that always show up or that you should expect. The first thing is just kind of demonstrating that you have kind of the investor mindset that everyone likes to talk about. So you know how to think like an investor. You kind of can demonstrate that in some way. I think there's always some test of your technical skills, and that can be both kind of financial modeling, but also commercial case studies typically show up. There's usually something around kind of the behavioral stuff. So, how are you what are you driven by? What's your kind of personality traits? How does that fit with the culture of the firm that you're interviewing with? And then also, I think the last element is probably usually some kind of discussion around, I guess it kind of ties into the third one, but more kind of, and that usually comes with the partner interviews where they just try to do the typical airport test where they see if like they think you are someone that they could bet on as a partner, that you have kind of the right traits for that. I think I was actually a little surprised that some of the funds I recruited with actually didn't have any financial modeling tests. I don't know if that's something that's become more new. Maybe you have a perspective on that, Kaushik, but that's not to say that you shouldn't prepare for it, but that was just an interesting observation that I made. But I think generally, just to kind of generalize, I think most of my processes started with some kind of introductory first round with a mid-level person, or even like a kind of senior associate VP type of person. And then after that, there would typically be some kind of commercial case study or financial modeling test, which would be a bit more heavy, and maybe you would have to kind of travel to wherever the fund was located. And then there would typically towards the end be interviews with the more senior folks. So say managing directors, partners, where they would probably focus a bit less on kind of the technical or commercial skills and more on you as a person.
Got it. Thank you, Martin. Super helpful. I kind of second all of that you said. A couple comments that you made. One is, yeah, especially guys at the post MBA level, this is much more of a fit thing, right? We're looking to hire you guys as VPs eventual partners of the firm. So spot on is that, look, I think the financial modeling, yes, there's definitely been a reduction in reliance side over time, and we're testing that in a lot of different ways, right? Going through projects you've done, going through some of these case studies, because we're hiring from really the top 10, 15 business schools. We know you're really smart. We know you can really learn quickly. It's about using judgment, and it's about sort of how do you tackle these case studies. And it's also about you as a person, right? We'd rather make a great hire and train them than maybe someone who's really sharp technically, but isn't maybe ready to be a VP or partner of that firm. So I echo all of that. Martin, just one follow-up. You did mention some key differences between the internship PE recruiting and the full-time PE recruiting. Can you drill in on a little bit more on what was more intensive on the full-time side, the post-MBA full-time recruiting side?
Yeah, sure. So I think my sense was that generally the whole process is a bit lengthier for full-time, and I think that's just, if you think about it, internship recruiting, when you're recruiting for an internship, the whole internship in itself is a long interview, right? And so you can I think if you're the PE firm recruiting a candidate for an internship, you're not making a multi-year commitment. You're kind of interviewing them for a role for a few weeks or a few months, and then you can make a decision based on that. I think for full-time, it's much more of a kind of a commitment from the PE firm side. So those processes tend to be a bit longer. And more specifically, I think there were just more cases, so they were just more elaborate, more detailed or technical.
And you spoke to
I
more
felt
people.
like
You probably spoke to every single person at that fund.
I was just gonna say, I think you also you speak to more people. I think you have more of the senior folks involved when you do full-time recruiting, because once again, these, they might be looking to hire you for a VP role and want to make sure that you are the right fit for a long-term career with that fund. And so I think you have more exposure. And then I think I mentioned it, but also just the difference that you should go with headhunters for the full-time process, which I think has some impact on how you do your own kind of outreach early in the process.
Fair enough. So we'll get to that in a little bit. Thanks, Martin. Great job on that. And then the one point that Martin mentioned is, yes, look, I think the networking part is super heavy. Like Martin said this, right? We over-index on the technical training and all of this stuff. And I know everyone I spoke to this fall on campus across all of our schools, we really emphasized on, you won't get a technical interview until you've networked your way into that place, right? So I think that's the important part. Claudia, let's sort of last but not least on this question. How was the VP level interviews process across all the funds you spoke to? What were some of the key, maybe, things that you saw that you want to share with our MBAs?
Yeah, I think procedurally, like pretty similar. The first round usually tends to be more of like, hey, let's walk through your background. And I think the one thing I would point out there is people usually push a lot on the whys. So they might ask like, why this undergrad, why this major, why this investment bank, why this fund, whatever. And they'll ask the same questions as well for, why are you interested in our fund and our thesis, and what does that kind of journey look like for you, and why are you going in that direction? So that's just something to note as you're kind of thinking through, I guess, how you position yourself in that initial sort of introductory round. So I would say there's usually one or two of these kind of qualitative rounds in the beginning, and then similar to what Martin was saying, then usually you move to kind of the technical or the case study portion. That can take honestly a variety of different forms, anything from as simple as like a paper LBO and then some kind of peppered questions around that, to sort of a 2-hour like blank Excel sheet, like 3-statement model test. And then you have like a debrief call afterward to like talk through it with like a mid-level person on the investment team. And they kind of poke at your assumptions and might ask you some other technical questions about like valuation or what have you, other like nuts and bolts of the model. And then the last form of it, I would say, is like the more kind of fulsome case study where you get like maybe a day or two to like put together some like mock IC slides, like a whole model, and you kind of send that over and then eventually sort of present it to somebody with some Q&A. And then I would say last round is usually like a super day type of format. So you would have like back-to-back interviews with probably like 4 to 5, I would say, like senior level, like principal or partner level folks. And I would say if you do come from sort of a pre-MBA PE background like I do, I would really make sure to kind of prep your deals really well. Like just go back through all the deals that you did. What was the thesis? What are like the high level numbers? What did valuation look like? What did kind of the post close, performance look like? How were you involved in kind of the operational stuff as well? Because a lot of those super day interviews will be more in depth on kind of your deal and just seeing how you think through building investment theses, and then some of it also will be more kind of fit oriented, cultural. They might ask you some of those like infamous questions like, oh, tell me about a time when you whatever worked on a difficult deal or with a difficult person, or something went wrong. So I would also be kind of prepared for some questions like that. But yeah, that's kind of high level how I would describe
Yeah,
it.
no, super helpful, guys. I think hopefully, the point is we're kind of crowdsourcing here with like really amazing experiences that the people have, all the panelists have on all these different processes. Couple of just points I'll add this is that, for Claudio's points, coming into an interview with your 5 best stories, right? And being able to put them into different buckets, right? Conflict or challenge or leadership, or, convince someone of this, or, whatever, right? So I think come in with your 5 best stories. Those 30 minutes go by like this. So just making sure, you're going through that. Number 2, not just deals like Claudia said, but any project on your resume, right? Be able to talk through, is that a good investment? Everyone in this call and everyone in the MBAs that we speak to is looking at investing roles. So be able to speak about everything from an investor point of view. And then number 3, kind of own your strengths, and then be open and humble about the things you don't have. Not everyone on this panel, everyone in our MBA class are going to have things that we don't know or we haven't done yet. So I think the hard thing about PEVC is that we expect you to do everything, right? Sourcing, modeling, investment highlights, operations, client people management, all of that. But clearly not everyone's going to have every one of those things. So be upfront with your strengths and push hard on that and the commonalities, and then be also, upfront and humble about some of the weaknesses and things that you have, and tell, convince them that you can kind of overcome that. So let's walk back just one more step here. Recruiting timelines, right? So let's start with private equity team. If you can start with what is a general timeline our first years and our second years should try to follow, or just again, generality, everything has more sort of specificity to it later on. But if you're looking at large funds, what is the timeline? If you're looking at middle market funds, what's the timeline? When should you be networking? When should you be interviewing, and sort of, all of that, and then maybe how that bleeds over to full-time and sort of secondary roles as well. So Claudia, do you want to start us off, and then we'll go to the VC after the PE folks?
Sure. So I think for internship recruiting, I would say kind of any time in the fall when you kind of start the program, like August, September onwards, is a good time to just start thinking about networking, and so obviously continue to kind of do that throughout the fall and early into the second semester. I would say in terms of formal processes, the US processes, since I kind of looked at both US and UK based ones, the US ones tend to go a little bit earlier. And I think like right around this November, December time period, it started to get pretty busy for me. And I would say there were like a couple processes maybe that popped up like late October or early November, but the kind of bigger wave came right around this time. And then honestly, there is still a good number of processes that sort of bleed into the new year as well, sort of like January, February. I would say that's for the US. I would say in the UK, it's a little bit lagging that timeline. So for example, I think most of the processes started to pop up in honestly January. It was pretty rare to find anything formal before then in London. So that's kind of the, I guess, overarching timeline. I think I hit all of your questions.
Yeah, no,
but
you did.
let
And
me
then,
know if not.
and then
Okay.
for folks like, the folks that were doing more middle market, or, not the large kind of funds, like that would happen when, Claudia, talk to us a little bit about that.
Yeah, so I would say the big funds tend to go on the very early end of things, and then the mid market again kind of follows. So I personally, I guess I came from mid market. I was mainly targeting mid market. So the timeline that I described is
Yes.
I think pretty well applicable.
And that's all the formal stuff, right? Claudia's talking about a lot of my MBAs.
Yeah.
maybe about 40 to 50% of you guys, or maybe even more than that, end up going more informal routes. So the ones that they're building relationships with in, November, October, September, even December. And by the way, you're not too late. If you're on this call and you're like, oh, I haven't done this yet, start today, right? You can't really change the past. But those are the conversations that tend to lead to interviews, in sort of the February, March, April timeframe. So a lot of my MBAs do end up getting their internships in March, April, sort of that timeframe. Again, it doesn't mean you don't do anything until March or April, but I want you all to start working towards that, but be open to this process kind of going on, because the supply is well below what the demand is for these roles. Okay, Martin, do you want to kind of comment a little bit on what you saw at HBS and sort of what was the general flow of timelines?
Yeah, I think, to be completely honest, I think it was pretty much the same as Claudia just mentioned, at least for the internship. Not much. I mean, I can talk about the full time if you think that's interesting, but
No,
I think
I think
internship is.
yeah. Any key differences in internships? If not, you go to full time. Yeah, that's fine.
Yeah, no, I think it's pretty much the same
Okay.
timeline wise, which makes sense. Like these funds kind of recruit from all the schools at the same time. It's not like they have different timelines for the different schools. I think full time, I think it really matters depending on what size of fund and if it's American or European. For full time, I focus mostly on the European ones. And so I think kind of similar trend there, where the really big funds, they start pretty early. So they will use headhunters, which will kind of put together short lists of people already starting in, say, August, September. And then kind of the processes really kick off in October, and probably run through October, maybe November. Some of them will do different batches, but some of them just do one big batch and the fall. If you go slightly smaller in size, I think it's a bit more variable, but generally they tend to go a bit later. So I think many of them don't have the same visibility. If you're like one of the big funds in Europe, in London, they typically have associate classes of like 6 people or 5 people or something like that. And so they have more visibility on their recruiting needs, assuming you're going for associate. Whereas the smaller funds maybe hire 1 or 2 people per year. So they usually tend to go a bit later. And so usually you kind of, you get engaged with you start engaging with the headhunters a bit later on those processes. And then I think just one final thing to add, I think it's a good idea to like start networking with funds in the first year, even if you don't think that you're gonna go for an internship. So the fund I ended up going with for full time was actually someone that I'd been networking a bit with them in the first year, talking about a summer internship. They didn't run an internship program, so didn't materialize. But then we kind of stayed in touch, and then I expressed my interest for them for full-time roles in the beginning of the second year, kind of in the summer in between, and they kind of looked me into a process without actually even going through a headhunter. And so I think that just goes to show that it's good to stay in touch.
Yeah, Martin, the last point I just want to double click on this is that, your end goal is to get a great sort of full-time offer, but that process starts literally the day you hit campus. I know I talk about this when I come on all your campuses in the fall, but exactly like Martin said, I can count in hundreds and hundreds, maybe over 1,000 examples of MBAs who've landed their full-time roles of people they've not recruited for the summer in, but network with throughout, because they ultimately, right, why do firms hire headhunters? Obviously, we have a headhunting platform, so use our platform. But my point is, they want to, they want to hire people that they're familiar with and people that they know and they can kind of recognize, which is why they go through their own, lists of connections and all of this stuff. So if they know you and you've been tracking them for a year or 6 months, it's just going to give you a lot more comfort with that, and they might actually, supersede some of these processes. Now let's switch to great job, team, on answering their timelines. Obviously, if there's more nuanced questions, you guys can raise it. There's a few Q&A stuff. Okay, we'll talk about that. VC team, could you guys talk about how the VC timeline looked like, and how do you best suggest or advise our MBAs to prepare for this like long process ahead? I know you can start. Yeah.
Maybe I'll start with just a few big distinctions, which is I think number one, I think it's quite rare, and Tina, correct me if you disagree, but I think it's quite rare for VC internships to turn into full-time offers to the extent that is true of, especially for like very traditional recruiting pathways, consulting and IB. You pretty much have and know that is a possibility. A lot of VC funds operate quite lean teams and only hire a full-time, a full-time kind of associate or partner on that team once it fully makes sense. Maybe it's just because they just raised a new fund, maybe because there's a gap on the team. Maybe they need someone with a specific sector experience if they've updated their investment thesis. And so they typically have MBA talent kind of year-round or during the summers come in and help with some of the operations and logistics, but there tends to be less of a pipeline from internship to full-time offer in VC than there is for other career paths. The other thing that I don't think I've heard of anyone working with headhunters for VC roles. I think it's just far less common in that industry. And then finally, the other big distinction, I think, is the part-time in semester roles. I think that can be true of some private equity firms as well, but to me, it seems like it's primarily a VC model. And so in terms of the recruiting timeline, obviously VC is much more just-in-time recruiting and pretty late in the game, unless you're talking about like really, really big funds, the Sequoias and General Catalysts and Bessemers of the world, in which case it's just a different sort of process. That those tend to be earlier, but for the bulk of VC recruiting, you'll primarily, if you want to do a spring in semester role, that'll be right around now. And then for full-time summer internship positions, that'll be sometime in the spring, starting as early as probably Jan, February, but frankly, going on until March. Like I signed my full-time summer internship offer in May. Obviously, it's not that I wasn't doing anything before then. I was in multiple different processes. It's just that I kind of had to trust that everything was going to work out, and it can go quite late. And then same with full-time offers. It's usually a spring season, but everything you do in the half year to year and a half before that matters in your ability to get those roles.
Completely agree with that. Tina, anything? What are your perspectives on this?
Yeah, I completely agree with that. And I would say maybe consider, if you can and you have the capacity, an in-semester internship, because a lot of people are focusing on the summer internship. Majority of people do that, whereas not everybody has an appetite to do in semester. So it could be considered like a higher chance. And actually, I really like doing in-semester internships because it gave me an opportunity to have several different experiences. And like, this is just as much for all of us as well to test out this industry. Do we like that? Maybe you move into VC, but a different sector. So that's a good opportunity. And I would just add, like, VCs work together. It's not a competition necessarily between them. A lot of deals are done with like multiple VCs. So if you intern at one company and you do well, they may, well, likely as was said, full-time offers don't always come from that, but they also have a network. So then you build up that support network to then recruit later on. So that's also really important. But yeah, I would say the same, that typically you go into it that you will need to re-recruit. However, I would say in the last like 2 years, we've seen, at least at Stern, that people have taken in semester internships and then potentially carried on to the summer and turned into full-time roles after that. So it is a consideration. Sometimes that is the case as well, that goes from in semester to full-time. So it can happen.
Great point. I couldn't agree more on the VC side. It's less structured, much more sort of self-driven. The one kind of just point I want to mention before we get to our last topic, which is networking, is, both on the PVC side, I want everyone in the audience, all of our MBAs, to build their own brand. I want your brand to be beyond LBS or Stern or whatever the brand is. And effectively, right? Two things, right? Stand out. Kind of, why should we hire Tina? Why should we kind of have Martin on our team? And the MBA is an amazing point to do that. And that's what I want everyone daily work on, whether it's building your thesis, whether it's writing some articles, whether it's connecting to people. You are building that brand network, personal capital that is going to be really effective, even if you're not going through interviews. So please focus on that. Now let's get to sort of the last topic of the session. I know we have so many topics to cover. So like I said, promise guys, we'll do another session in a few weeks. And we're also post the Thanksgiving break. And then, like I said, we're also, for all of the sort of 300-400 people that register, we're going to share the recording as well, so you can kind of access and learn from it later on. A big topic of discussion here was networking, which I do think is the singularly most important, skill set / thing to do as a and a lot of the Q&A that's come in the chat as well has been around that. So I want to try to go through these. On the networking side, team, like what really matters? Kind of you all have done collectively, I'm sure, over 1,000 networking outreaches and chats and whatever's, right? So let's just focus on what really matters, how to stand out. And you all come from very different background. Martin, you came from pure play consulting and then went, to a pretty, very, very well-established fund for the summer and as well beyond. And same with my VC folks and Claudia as well. So how did you structure your outreach? How did you structure your messaging? And how did you actually move the needle, and how did you get people on the phone and get them to consider you and so on? Can maybe I'll start with the VC team here, and then we'll go back to the PE team. Why don't you start us off, and then I'll do some quick hits on and if the other speakers can go through the chats and either answer them in the chat themselves, the Q&A, or bring them up in your answer, that would be helpful. But why don't you start me off with networking and what matters here?
Sure thing. And sorry, y'all, I have to drop a few minutes early, but I'll try to keep this concise. So I think the three biggest pieces of advice are, one, be personable, and just be someone that they enjoy talking to. It's not all work. You can find other points of connection. Two, warm intros, insanely important. If you can get someone to introduce you to someone else, that's always going to increase your likelihood of having not just a conversation, but a better conversation with that person. So use LinkedIn, use every bit of kind of network, resources or platforms and people that to get that warm intro to someone that you really want to talk to. And then finally, position your outreach strategy in the way that you have these conversations with the mindset of adding value to them. It's not just about learning from them and getting them to like you or to eventually keep you in mind for a position, but think about how you can support them. Think about what it is that they do day to day, what it is that you have in your toolkit and your network that can be of value to them. Be it, you have access to the entrepreneurial ecosystems within your schools, and that's a great thing that you can bring to the table. But there's also other things that you can do for them and try to approach conversations with that mindset.
Amazing. Thank you. I know you have to drop, so drop whenever you need to. Tina, on the networking side, absolutely warm connections, value add, and sort of the hustle, I think super important. Tina, what else would you add to sort of the networking side?
Yeah, I think a lot was covered there, but personally, what I think happens a little bit less that I think worked for me was in person, and I tended to prioritize that. Like being in New York, there's a lot of events that are happening all the time, and you meet people that are potentially not an employer, but a connection. I met people in different industries that you just connect with on a different level, but they also become your network. So I would just bear that in mind when you're going out to events, either they're VC events, founder events, you're building up your network to keep in touch with people in a genuine way. And then you can leverage that later on to potentially move into it because everybody has their own network. So I would just echo that point of we see sometimes people go up and it's directly with the jobs, like, are you hiring? Maybe they're not at that point. So I think it's important to echo that point of building a relationship when you're networking, and obviously everything else.
Yeah, definitely. And then also exactly on the in-person stuff, the long-term view, right? So you only are going to get one internship and one full-time job, but what other people think of you is so critical in this industry. Martin, how about you on the networking side? What worked for you, and some tips on the private equity side?
Yeah, I think in general you wanna have a narrative that makes it seem like you were kind of destined to go into private equity, and now obviously many of us don't have the cookie cutter background, but you can still draw on different things. So for my part, for instance, I did finance in undergrad. When I was at BCG, I did a lot of PE due diligences and worked with PE funds. At HBS, I'm doing a lot of finance classes, etc. And so I think that's just one thing, trying to not just like coming in and saying, oh, I'm all of a sudden I'm very interested in PE and you should take a chance on me. Instead, you kind of have a narrative, even if it's not super traditional. I think you can still kind of be creative around that. I think the second thing is, in general, when you're networking, people who are at these funds, they get a ton of cold emails and outreaches every day. I think you want to do something that shows that you've invested at least a little amount of time, or something that shows that you're just not like typing in a template and reaching out. And so whether that, just some examples could be like, oh, I had this case study in my HBS class about your fund and I thought it was really interesting, or I saw you did this deal. I've been looking at that company and these are my perspectives. I'd love to talk about it. I think just generally in terms of networking effectiveness, like random cold outreaches are always pretty hard because hit rates are frankly quite low. So anytime you can get a warm intro, that's always preferred. And if you can't get that, then I think you should always prioritize like this is low hanging fruit, but alumni from your school or the firm that you were at, or other things like common denominators that you can draw on when you reach out.
And before I go to Claudia, I think Martin, exactly right. All of you guys have said this already. Treat it like treat it like on the job, right? If you're a VC or a PE investor and are looking to get the attention of a management team because you want to invest in them, what are the kind of hoops you'll run through? Sort of getting a warm intro, sending them something relevant and talking about sort of your credentials, all that stuff. So really try to replicate your readiness for the job in the interview process and recruiting process as well. Claudia, kind of any thoughts on networking? You did the whole cross-Atlantic networking, from both London funds and US-based funds. So obviously you had to be really efficient. So how, what worked for you? What have you seen work for folks?
Yeah. I mean, really well covered by the rest of the panel, I think, on like some of the core like best practices, like like always leveraging kind of like common fabric with people. So if it's like the undergrad institution, whatever else it is, always use that as a jumping off point. I would also say, maybe adding on to that, like leverage people that maybe aren't even directly in the space that you're looking to go into. So for instance, in London, the way that I would position a lot of my outreach was like, hey, I come from the US market. I'd love to learn more about how kind of funds operate here in the UK. And like, honestly, one of the most valuable conversations that I had was with a guy that worked in secondaries, or like was like an LP, right? Instead of somebody who actually works on the investment team of a fund, because oftentimes like LPs or secondaries folks have sort of a broader based view of fund health, like how are these funds actually performing, like what's their reputation. And so just like also, and then they can make introductions as well because they have a ton of great relationships. So maybe just adding on there, like leverage folks that may not be like directly in the path, but are adjacent to that. I also think like just being thoughtful to Martin's points about, which funds are you approaching and how does that like journey, like the narrative, like the why, like what is the why, right? So for instance, even if you come from like, let's say consulting or advisory, maybe you worked with clients in a specific sector that this fund is focused on, and you can leverage that as like an obvious sort of point of like, hey, this is coming to you and not some other shop. So I think those things are
Amazing.
some
Yeah,
comments.
I mean, I think our audience is getting a ton out of this because basically you guys are short-circuiting a lot of this work. Tina, go ahead. You had something else to add. And I'm just going to do right after Tina's answer, like a rapid fire of all the Q&A that's been asked, both personally in my personal chat and the Q&A, and then we'll end the session. Go ahead, Tina.
Yeah, I just wanted to add, to make it personalized. I think we had some comments there about whether there's a connection, but I wouldn't send just a copy and paste out if it's really obvious. I think people will just scan right past it, whether it's a connection that you have or if you're applying to a specific fund. Make sure you've looked into the fund. What are they focused on? Which stage are they? Maybe you go with some value add of, I've been looking in this area and I have this really interesting company that I'd love to talk to you about. Actually make it personalized to who you're talking to, because that's the quickest way to just get somebody to look past it if it's just a generic, because other people are out there that are providing this value and really looking into them. So make yourself stand out.
Totally agree with that. It's got to have at least one or two commonality points, and sort of, you can be persistent, but you guys, like Claudia said and Tina said, demonstrate the why. Great job, team. So let's just go through a couple of these questions here. Okay, this question on who to reach out to at the firm first. I think, Martin, you really answered this well. It just kind of depends. I think I would use a kind of a very broad strategy. I would reach out to as many MDs and partners if they come from your business school, right? Either from a Wharton or a Booth or from Columbia or whatever. Definitely makes more sense, but clearly they're less connected at the junior level. And so do you guys have any advice on, did you find more success with the senior people or the junior people, or it was kind of mixed bag? Anyone on the panel can take this one.
I think there's value.
Yeah.
I was going to
Go
say,
ahead.
I think there's,
Sorry.
Thanks,
Yeah,
Claudia.
go ahead.
I think there's value in all the conversations. Maybe if you're reaching out to a more senior person and they may not have time to connect with you, if you're reaching out to a junior person, you can get valuable information about that fund, how they operate, etc. Maybe they'll refer you on, but even if they don't, you can then reach out to the more senior people with a bit more context and ammunition and showing interest that you're willing to speak to everybody. So I think both are
Totally
valuable
agree.
conversations.
And then this is not a structured process. Not everyone's always talking talking internally. And certainly, guys, don't take it personally. Nobody's talking about you. Okay, so just feel free, like, you know, we're busy enough, right? So it's okay if someone ignores you or doesn't talk about. Nobody's gonna know. You can reach back out. You know, trust me, it's not gonna matter. The other kind of a trick trade is that you know, if an MD is usually really busy, but they'll just pass it along to someone junior. But if that's being passed along by an MD, the junior person is going to be much more focused on you. So I've always found, and one of the tricks I told my MBAs is, obviously don't be facetious about it, but reach out to the MD, and then you know, if they're too busy, they'll pass you along to someone else. But the core advice which we're giving you all of connectivity doesn't change. So whether you're connecting with a senior person or a junior person, you got to connect with them, right? What are the top 3 priorities to focus on transitioning from a corporate background to PE, or without sort of prior advisory background? So look, I know there's some folks with the MBA background who are interested in investing, but just don't have either the deal background or the consulting background. You know, I think unless, you know, the couple angles could be, you have a really strong industry expertise. I think in a lot of ways, if you're a first year, I would really try to go down a traditional pathway like an IB or consulting, at least for the summer, so that you can credentialize yourself in the deal side. If you have 0 deal background, if you're coming from corporate M&A or coming from corporate buy side or corporate strategy, certainly probably have more to add. So I think really being honest with yourself on what are your skill set you can add, what's the overlap to what they're looking for, and is there enough overlap there? And are you willing to go through this more risky, longer dated process until May, you know, April, May, June to get an internship? Or are you just kind of saying my ROI of my MBA really matters, and kind of the risk and the reward concept? Again, very different decision for different people here. We've seen people be successful fully across the board. Finally, how do we approach semester internships? Are they usually published, or is there a more informal process? I guess let's end on this question, guys. Is there, look, I think the point that was made earlier by Tina, or I think it was Tina that made this point. These days we're seeing more conversion from in-semester internships to full-times and summers, and we're from summers to full-time, right? It's more to do with timing, right? If you're working with someone in the spring, it's easier to just transition into the summer, right? Versus last summer versus this. Again, it's a little bit more of a risky proposition. For my first years, look, I don't see any reason why, if you want to break into VC or PE, you shouldn't be doing an in-semester internship. Unless you already have a job, obviously, but you know, your spring semester. But any tips, team, on how to find in semester, or I think more broadly, informal processes that are not published, right, on sort of the job boards and so on. So any advice there, and then we'll sort of close up.
Start on the VC side. I often find if they're published, there's hundreds of applicants within an hour. So those are like actually published job descriptions. I found it useful, either leverage your university, sometimes they reach out directly, but also newsletters, often things are published there, but more informally published job roles I see on LinkedIn a lot. I've seen so many, even in the last few weeks, that people are publishing opportunities of in-semester internships in a variety of roles, not just investment roles within venture capital, and they just post like literally a post on LinkedIn. It's not listed as a job. It's not going to come up in the list of jobs. So I would be really targeted in who you're following on platforms like LinkedIn and Twitter. Follow all the funds that you're interested in. Follow people that are adjacent to those, or people that are influential within that industry, and who they are liking and commenting on. And I've seen a lot of different internships shared that way. So I'd say that's a good source.
Great. And one addendum to that is also, or addition to that, is that you know, if you especially, I recommend taking a sort of a targeted approach anyway. So if you're looking at sort of a, you know, middle market in sort of enterprise, or middle market in climate, or whatever, and you should really get to know every single fund operating in that space, hopefully, or one or two or three segments, and really following them and just kind of talking to them, you will get a sense of that. I do think that if you're coming from a non-traditional background, the informal processes are going to be your best friend, because you're not going to have to compete against 100 or 200, you know, resumes that are then being AI screened. Okay. So, cool. Anything else from Martin, Claudia, on this sort of informal process from you guys?
I guess I would just, I mean, that's very well covered. I would just say that, like, this is where the networking again is like really valuable, because again, you just never know like who's gonna know what, you know, and who's gonna know who. And so just again, try to be open-minded. Definitely be targeted about who you're talking to, but be open-minded again about those adjacencies that I talked about, because those can be super valuable as well.
Yeah. And one last thing on networking, guys. So if you reach out to someone in November or October, I want you all to send them like an update email in like December or January, right? So reach someone in October, say, hey, I just finished my semester here at, you know, LBS. this is kind of what I've done, and really thank you for your advice. This is what I'm looking to, or I just got an internship, a summer internship in this space, or spring internship in this space. Just wanted to post you. It's really hard when you connect with someone in October of your first year and then go back to them. It's like, November of your second year and be like, hey, it's me again. I want something, right? So I think you have to, cultivate these relationships. The point isn't just making a lot of first-time contacts and then letting them just fester for a while. It's sort of, how do you cultivate these relationships in a non-invasive, non-transactional manner? It's like, send them some interesting articles, kind of say, hey, I'll be in, New York, or I'll be in Boston. Love to connect, right? I'll buy you a coffee. It's on me, right? Something like that, that will just kind of make them cultivate these relationships over time. Again, the folks that are successful are not transactional about this. The folks that are successful are people that we actually want them to work in our fund. We actually want them to work alongside us, and they happen to be really smart, and they happen to be really competent, and all these other things. On that note, team, I know we went 8 minutes over here, but appreciate obviously our panelists. Really well done. I peppered you with so many different questions. You guys did an amazing job as always, as you always do on your respective leadership side. But yeah, great job again. You don't bombard our panelists, but if you want to reach out, if you have questions on LinkedIn and stuff, I'm sure they'll try to help out. Certainly, I'll do the same. It's harder to get a hold of me, but I think you can try to send me a LinkedIn message. I'll try to respond in an orderly manner. But otherwise, team, we'll have more of these sessions. I think this one was kind of break the ice with a lot of our leaders on this stuff. We're just going to bring on more firms and professionals over the coming weeks to just give all sides of this, because once you have an internship, I want to focus on how do you be successful, as well as sort of across the roles and so on. So if there's nothing else, guys, we'll send a follow-up email with all the different things that we covered today, the recording, all that stuff. But more than anything, I wanted to thank obviously everyone for spending a Friday afternoon with us, as well as our panelists for their amazing advice. Until next time, thank you all for joining, and then we'll see you next time. Okay. Thank you. Thanks, guys. Great job.
Thank you.
Thank you.